Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar displayed a stellar performance on Wednesday after an extra dose of encouragement following the conclusion of the US Federal Reserve's last two-day meeting for 2023. As widely expected, the US Federal Reserve left interest rates unchanged for the fourth time this year and kept its federal funds rates between 5.25% to 5.5%. US Federal Reserve Chairman Jerome Powell said in his post-meeting press conference that the historic tightening of the monetary policy is likely over, with a discussion of cuts in borrowing costs coming into view. The US Central Bank indicated at least 3 possible interest rate cuts for 2024. However, Powell did go on to say that and made it very clear that interest rate cuts would depend on how the economy is doing, adding, although it's too early to declare victory, the risk of impossible recession in the US economy still exists. While higher interest rates have been cooling the US economy, the latest rate hike was in July, dramatically bringing down inflation from the peak of 9.1% to 3.1% in November. Meanwhile, the dollar index, which measures the greenback strength against a basket of 6 major currencies, plummeted from 103.75 and currently sits at 102.80. So with the topside target near enough reached at 67 cents, if we clear 67.15, that would give an extension on towards 68 cents. The technicals are firm, and ADX supporting the bullish trend, so therefore any pullback is expected to be limited. The euro also strengthening for the fourth consecutive day, and added with the weaker US dollar, the market is now destined to challenge the top side of 109 and on towards 110 as the previous call it still stands. Any pullback I feel will be limited, and support is seen potentially around the 108.5 area. Dollar yen plummeted and moved strongly from the downtrend and challenged the 141.5 area. I like the way this market has placed itself, and therefore a trend supporting a bearish case, and both the indicators married could actually see an extension beneath 141 and look towards the region of somewhere around 138.5 and reassess. Sterling also stronger and posts an engulfing candle that could support further gains into the Bank of England's rate decision, which widely expects to keep on hold around 5.25%. In viewing that, it's more about the statement, and if Governor Bailey is dovish, then the market could actually see stronger gains, I feel, this time around, and look towards the objective of 127.1570. Having nearly challenged the downside call of 1,968 to 70 area, the market posted a very strong engulfing candle that could actually see further gains. However, that being said, I am actually neutral at these levels due to the recent blow off top. The market is likely to be very whippy if we exceed beyond 2040 to 50 area, if the market does exceed beyond 2038. So I'd rather sit out at this top side call here and see how the market eventually unfolds, whether if it does concrete a stronger bout of demand or a pullback. Wrapping up with oil, the market is showing bullish divergence clearly from the RSI, and therefore from the price could give further gains to the upside and eventually reach its target of around $72.60-65, and above there views $78. Until we see this current pattern negated, then I feel the bulls are lurking and a potential recovery is coming in the nearest term. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.